The U.S. economy has been slowing down for 2 consecutive quarters. It is currently being saved by the fact that it started to decelerate from very high growth rates. In the third quarter of last year, a quarterly growth rate of 4.9 was recordedly. In the following quarter, the growth rate fell to 3.3, and in the first quarter of 2024, it dropped to 1.4. Consequently, the U.S. economy started to slow down quite late compared to the peak in Fed rates. But it is now doing so very quickly. It's frightening to imagine what the economic growth will be in the second quarter of this year. However, on Friday, one of the Fed's governors, Thomas Barkin, stated that the current cooling of the economy is not strong enough to slow inflation to the target level. Mr. Barkin is confident that, in the end, the U.S. economy will slow down more significantly, but there's no talk of a recession. One could say that the Fed even benefits from the economic slowdown, as without this condition, it would be extremely difficult to bring inflation back to 2. Mr. Barkin noted that the Fed should maintain a flexible approach to changing monetary policy. It's important for us to evaluate all incoming information as a whole, considering every indicator, and only then make such an important decision as lowering rates, said one of the Fed's directors. Barkin also noted that companies that set prices for housing and services still have room to raise prices. Financial conditions need to remain tight for longer to stop this process. Based on all the above, I assume that inflation will decrease very slowly this summer, or not decrease at all. This will lead to the market's dream of the first rate cut being postponed for the 3rd time. Consequently, the U.S. currency will receive additional factors for strengthening in the foreign exchange market, which is what I expect. Almost all the information coming from the Fed now indicates that the first round of policy easing should not be expected in the coming months. Inflation is slowing down very slowly, and only in the last 2 months, if we talk about monthly data. At the moment, I see no reason for the FONC to ease policy.